Understanding the technology that powers the money is essential. Knowing the business drivers that inspire how the money is made is crucial. Bridging the gap between the mind of the technologist and the mind of the business is monumental. That is what TBF is all about. Let's start this never-ending conversation. It's time.
Happy Friday. We're back with another episode of the Tech Behind FinTech. Today's title, Revolutionizing Community Banking, the Power of Fintech Investments. Joining me is Carey Ransom, Managing Director of BankTech Ventures. Carey, how are you doing today?
I'm doing great this morning. How are you? I guess it might be afternoon your time, but yeah, doing great.
It literally just turned afternoon my time. So just in terms of reason Carey mentioned that, I'm on the East Coast, he's on the West Coast. So it's early on his side.
Beautiful thing we can do it this way.
I know it's excellent. So, let's get some housekeeping things. We are streaming live from Facebook, LinkedIn, YouTube, Twitch. We also have a stream going from Instagram. I'm your host, Anambio Swagu of the Tech Behind FinTech. We're live every Friday, 12 p.m. EST. Today's a very exciting show, talking about revolutionizing community banking, the power of fintech investments. I'm going to read Carey's bio so you can understand why he's an expert in helping us understand this. So without further ado, Carey Ransom, Managing Director of BankTech Ventures, heads a $115 million strategic fund that invests in innovative companies that make community banks better. With over 100 bank LPs, the fund is led by community bankers and fintech leaders. Carey, a seasoned tech entrepreneur, also founded Operate in 2019 to invest in data-centric SaaS and fintech startups. Prior roles include COO at Aspiration, where he grew the firm significantly, in executive leadership positions at Real Practice, Experian Consumer Services, and Happy Money. Throughout his 25-year career, Carey has worked in product, marketing, business development, corporate strategy. He is active in the SoCal startup scene, contributing to various organizations and universities. Passionate about fostering clear and intentional cultures, Carey emphasizes teamwork and growth and has hired hundreds of professionals. A frequent speaker at industry conferences, he hosts the Operate podcast to highlight founders, funders, and industry luminaries. Carey's rich experience, coupled with his family retail business background, shapes his belief in building successful companies through purpose. Excellent bio.
Hey, thank you. I should bring you with me wherever I go, Namdi.
That'll be cool, man. I might take that job offer. Hey, listen, before we started, I was joking with Carey. His full name is Carey Ransom, and I was like, dude, you sound like a Marvel superhero, like the real name. Like I just think I think your name is like so cool. Like I just have to say that.
Well, thank you.
You know what? Before we jump into revolutionizing community banks, tell me about your family retail shop that I would assume you grew up around. So you
I did.
Out of small business and business values doing that. Like, can you explain that?
Absolutely. I have said many, many times that most of what I feel like foundationally I learned about business and life, I learned working with my dad and my grandfather as a kid. My family started a retail lumberyard in 1872. And so by the time I showed up, it was already well over 100 years old and had miraculously really made it through several generations of family. If you study family businesses at all, it's rare that they make it into multiple generations. And so by the time I came around, my grandfather, my father, and uncle were really running it. And I started working with my dad when I was probably 10, because I just liked the idea of being around him and being around this thing that was really a central gathering point for our family. And so I would go to breakfast with him on Saturday mornings and go down to the store and do whatever I could find to do to try to add a little value, and eventually learn more and more about the business. And I think ultimately just decided I had pretty high interest and ambition. And I had a sense that it was going to be difficult for my ambition to match with the family's just experience and desires for the business. And so very consciously decided not to join the business once I got out of high school in any permanent way. And so chose to take my own path. And my dad continued to operate successfully for many more years. And when there wasn't a next generation to take it over, ended up selling it. Now been 7 or 8 years ago. And so it was just shy of 150 years in my family when he sold it.
What are some of the lessons you took from the family lumber business over to the fintech finance or business scene in your?
Sure. Yeah, I think the thing that, is there are a few for sure, and probably ones that I draw on all the time, not even fully realizing it. I mean, the number one thing I've said many times is this idea of never asking someone that works with you to do something that you wouldn't do yourself. And you just saw very clearly from a young age my dad led by example in every which way. The patience he would show to customers, the pride he showed in the store and its cleanliness and how it ran, and just the long-term relationships that they had invested in, and the community involvement as well, were all really core foundational values that I've taken with me through every stage of life, and have tried to figure out ways to get involved in every community I've been a part of, from where I was to school to my first city. I was in Chicago, and then I came out to LA just over 20 years ago. It's kind of followed with me all along. And I think the other sort of flip to that was, we had been in this same location, same business for well over 100 years. And I we talked to my dad a lot about not taking that for granted, that we weren't guaranteed 10 more years or 20 more years just because we had been successful for as long as we had. And we needed to continue to think about where the world was going and look for ways to add value. And I think that has served me really well in the number of startups that I've been involved with, and particularly getting into fintech a little over 10 years ago, to really think about customer expectations and needs, and that as a financial institution, whether you were an existing financial institution or a new emerging fintech, that you had to continuously work hard to earn that customer's business, that there were so many choices, and the digital transformation of financial services was going to make geography and boundaries and the kind of moats that a lot of banks had for a period of time make them almost irrelevant in many respects, and that you were going to have to rethink the formula of what would add value to a customer, keep that customer both excited and engaged to want to be part of that relationship, and feel like they were well served from a long-term value and relationship standpoint. And some people would still value that person that was physically within arm's length, but that increasingly it was going to be a different formula of capabilities and service that was going to really win in various niche markets in the years to come. And that's really informed a lot of my thinking over the last decade.
A few things I want to touch on based on what you said. The first thing is the strong aspects of community that your father exemplified through his business, and with the family business and so forth. I might be off here, but I'm drawing a synergy between those that community aspects and what you're doing now with community banking. Is there some sort of connection?
Oh, absolutely. I mean, there was a literal connection. We were in this small town in Indiana because we had been there for so long, and because we were one of the larger businesses relatively in that town, we were naturally involved in the local community bank. So I grew up in and around community banking. My grandfather was on the board of the local community bank. My dad ended up taking his board seat. So my family's been involved in this bank for 100 years. And that was my first exposure to financial services, was community banking. I got my first mortgage from this bank when I was in my early 20s. I had accounts there that were the places where I had my first bank accounts. And so that was literally what I grew up around. And I think just like my family's business, where we were in the physical retail business, when I grew up around community banking, it felt more like a physical retail business. You went to the branch, that's where you did banking. And the retail lumber business was still, and still is today, a literal weight movement business. We're bringing lumber in, we're moving it to people who are going and using it. And so the geographic boundaries of that business are much more natural because of the weight. We really could only be as big as a business as the geography that we could serve because of the size of the town. And so there were some physical limitations. And we explored some e-commerce ideas in the early days of e-commerce, but it was a little bit more difficult in that business, as you see and have seen banking move to almost 100% a digital business. Fewer and fewer people are moving literal cash around, and more of the interactions are happening here. That now changes the sense of what I would call community, in that the community can also live digitally. And so one of the things that we talk a lot about to our banks is to go through this exercise of what I call redefining your community. And now geographic description of a community is one option or one definition, but it's not the only definition. For a bank today to become a much more virtual digital bank and go explore and add value into other remote communities. You mentioned Twitch, people who are really building their community on something like a Twitch stream or a Twitch community. That's a group that a bank could presumably go and try to serve in a very niche and focused and engaged way. So encouraging banks to reflect on who are the communities that you are well equipped to serve in a unique and valuable way, and how can you go participate and add value to them so that they embrace you as a partner in that community. And geography is one option, but it's not the only definition in today's world of banking.
Can you describe what a community bank is? Because there's different types of banks. We have investment banks. We have the big ones like the JP Morgans of the world, the Bank of Americas. We have credit unions. So in that circle of different banking, we have charter banks, industrial banks. What is a community bank?
So there isn't a literal legal definition, and I think a lot of people kind of generally lump it somewhat historically with the idea that it was focused on a geographic specific area, right? It could be a single community, and you have some banks still that are sub 100 million in assets that serve a very specific community geographically. And so that at the low end is probably your cleanest, simplest definition. And as you start to increase the size of the assets or the scope of this bank, you start to bleed into this higher end where some people might call them regional banks or regional community banks. They might serve the northern part of a state historically. And again, this is a definition that continues to blur and blend. And so we generally, as I think about BankTech Ventures and our partnerships with community banks around the country, the largest ones that we work with typically are in the 20 to maybe $25 billion in asset size. So some people might call those more regional banks. The sweet spot that we typically work in is a bank that's maybe 2 to 5 billion in assets. And we work with ones that are sub 500 million and assets. And I think our view is we exist to help all of them in the ways that they want to be assisted. And so the typical community bank does get involved in its community. The people leading the bank are visible and accessible. The organizations tend to be a much flatter. And the people that generally bank with them, whether that's consumers, which some community banks still continue to service very well, or small businesses or larger mid-market businesses, they generally do it because they value the combination of the relationships that they can have and that banking knowledge and capability that that bank can bring. And so we talk to customers all the time who say, I want to be able to access the president of the bank when I have a problem. And that's worth it to me to know that I can resolve it, not through a call center in who knows where and to a nameless, faceless institution, but I know that this person who is also involved in the local school system or is part of the leadership of what's happening in this community. I want to know that I can have a relationship with him or her if and when I need it. And I think for us, that is a core part of how we think about what we're trying to enable is in a increasingly digital business and digital world, how do we find the best combination of what we say is high tech plus high touch, and that is community banking at its best in 2024.
I want to now touch base on something else you said earlier, where you're talking to community banks and you're telling them to start redefining what community means. And I want to, and I think that's really interesting because, as you described it and talking about community banks, you have some experience there. And to your point, right? Local to a certain region or a certain area where okay, this is the bank that I go to. I like the tellers are there. They're involved with the community, maybe, through service, through boards and different things of that nature, right? But when you start changing the mindset and saying, you know what, let's redefine what community means, because you could have a community based on, I don't know, a certain niche market, right? And that's your community. They may not be necessarily local to you, but that's a community in itself. How is that mind shift working with the traditional community bankers that really focus on that local area?
Yeah, I think it's highly varied. And part of what I also say when I encourage them to go through that process is I say, look, you may come to the realization that your only community that you feel that you can really win in is the existing geographic one that you're in. So if you go through the exercise, you may come to the conclusion this is still our best community. But I encourage them to think about the idea of stacking maybe some other ones on top of that. So within the geographic community you have, to your point, you may have a demographic or affinity group, or maybe there's a large employer in that market who has a headquarters in your geography, but maybe they have locations outside. And maybe you could go appeal to them to also partner with them in the other places where they employ people. There are any number of realizations that I think are possible through that. And so that's part of why I encourage this redefinition, rediscovery process as at least one thing strategically that they can do. What you're also seeing, if you think about how this is manifesting itself, is a number of community banks have decided to get into the partner banking or banking as a service business as a way to support other communities. So I have a bank who's a very close partner of mine who has enabled a lot of fintechs who have niche communities that they're trying to serve to partner with their bank. And so the way that they have expanded their community or communities is by partnering with others who have the ear or have the access to those communities. So there are a number of different ways to execute on it. once you've decided here is a group that we want to go try to serve better than others might be able to or willing to.
No, I like that. And I want to kind of circle now back to your journey, right? Like you mentioned that you got into fintech 10 years ago. Is that
Yeah,
accurate?
thereabouts.
All right. So I want to understand, like, how did that happen?
Sure.
And then how did it lead to BankTech Ventures?
So I was a very hard sell to get into fintech. I had spent most of my career to that point building mostly B2B software companies and had kind of done a number of different types and some more broad, some more verticalized soft, and got into SaaS, if you know, software as a service, in the very early days. And after my last software company, I had run and successfully sold a software company that was in the legal industry as the primary customer base. And I was ready for a new adventure and was thinking about a number of opportunities. I was approached by a founder who had started a fintech company, and he compelled me to join him. And really, you know, when you're an entrepreneur like I am, and somebody challenges you to be part of the change, it's hard to resist that. And I was pretty cynical. I'd grown up, as I said, around community banking. I had gone into a couple of big cities. I lived in Chicago. I came to LA, and I was sitting in a place where I looked at my financial support life and said, I don't like my bank. I don't like my insurance company. I don't really like my financial advisor. I don't feel well served as a consumer of financial services out there. So it's not an industry I like. I don't really have this money optimization personality. I'm plenty educated to understand how to do it. I generally don't like to spend the time on it because I like doing other things. And this founder really called me on it and said, I agree, but I want to go build the better mousetrap. I want to go be the change. You should come help me do it. And again, convicted me to say, yeah, you're right. That's what excites me, is to go build the better solution to a problem. So, okay, I'll come join you to try to do that. And once I was in and I started looking at where the problems were and opportunities to make it better and very customer first, it was a treasure trove of opportunities. And so just kind of kept finding one after another. And so built what was ended up being a consumer lending business as the first fintech that I was involved with. The company was called Payoff when we launched it. And then I left there and ended up going to another consumer fintech called Aspiration that you talked about earlier, which was really a neo bank focused on a specific community. And through both of those businesses, we partnered with a community bank. We weren't a licensed either store or lender or mover of money. We needed a partner who could help us do that. And so for the lending business, we partnered with a community bank in Utah that was an industrial bank there. And that gave us the ability to then lend money to consumers all over the country. And then the last company that I was a part of, Aspiration, before I started to get into what I'd call parallel entrepreneurship, we partnered with a bank that was based out of the Seattle area that was doing a redefinition of community banking, becoming a partner bank to work with a whole bunch of niche fintechs. And we were their first partner. And I became friendly with the CEO of that bank through that. Fast forward to the start of BankTech Ventures, Eric, who's the CEO of that bank, Coastal, is one of my partners in BankTech Ventures. And so as we were putting it together, he was one of the ones that brought it to me and said, we think there's an opportunity to put this community bank consortium together to really help everyone move forward. We think you'd be a great addition to the team. What do you think? And so those relationships that were built through those journeys ultimately led to how BankTech Ventures, the right opportunity at the right time, all came together.
You know, a few things with that, because I'm going to get into BankTech Ventures. I have some questions there. You mentioned a term, parallel entrepreneurship. Can you break that term down?
Sure. So I had done, by the time I went through Aspiration and helped scale it up, that was my eighth startup. I had done those serially, one after another. And by that point, I realized that there aren't that many people crazy enough to do as many as I have. And to have as many of those experiences, I've literally had every job in a startup except for writing software code. I love software engineers. I've worked around them pretty much my entire professional life, but I had had every other job. I had sold, I had been the finance lead, I'd been the CEO, I'd been marketer, I'd been a product manager, I'd done customer support. I literally had done all these various roles and I had scaled them up. And I said, I just feel like my best path from here, as long as I continue to work, is to try to do what I've done in one company at a time in a more parallel manner. And that context shifting amongst ideas, which most people struggle with, I actually thrive on and enjoy, and felt like if I could get involved in a number of different startups in different ways, I didn't need to be the CEO of all of them, but if I could play the best role I could play for each one, that could stretch and exercise me in a really enriching way. And so that's what I started to pursue once I left Aspiration. That led to me starting what became Operate, which was this idea of, as we call it, a studio, but really it's this idea of each startup that we get involved with, it is a creative endeavor. And studio kind of connotes that it's creation and it's creative, and each one is a snowflake. As much as you could try to apply systematic approaches to every company, I tend to believe that when you get a bunch of humans involved, you're going to have high variability, and you need to address that and work through it with the various people involved in each one. And while most people prefer to be focused on one thing, I can kind of play a differing role in each one. And that has been incredibly fulfilling for the last 5 years since we started Operate, to get involved with founders who are super passionate and driven and focused in the thing that they want to go create, and find how we can support it, each one in unique ways where they need gaps filled or they need extra attention or hands and feet to give it a higher probability of succeeding. And so that has been the path. So we have 30 companies. Our role, our ownership, and our involvement is varied from company to company, which we've been okay with. And thus far, that has proved to be a formula that seems to work for us and seems to work for a lot of the founders that we work with.
You mentioned that each company is a snowflake, being unique in itself. With all of your experience in dealing with so many portfolio companies through Operate and BankTech Ventures, what are some common themes for success that you have seen?
I think, I'm probably still very much a Midwest pragmatist, and it's things that are pragmatic, focusing on solving a real problem, validating that the customer that you're ultimately trying to work with cares enough about that problem to give it some attention and consider new solutions that might be better, that they're willing to pay money to have that solved, that it's a high enough priority in the list of things that they're dealing with, and that you can get a group of people to come around you as a founder to help you solve it. Like, those are, it's not rocket science. It's fairly simple, but as you know, that's harder than it sounds. It sounds simple. It's not. It is difficult. And the other one that I probably have a little bit more attention to than some, I don't necessarily consider myself a VC in the traditional, the way the market talks about it sense. I'm a private company investor. I love to help build startups. I have a general view. I want to try to get every founder that we get involved with to some sort of success. Most of those are not going to be billion-dollar successes, billion-dollar outcomes. I don't want to drive them to a place where that's the only outcome possible for them. And so my pragmatism also tends to drive me to look for what I tend to call proper capitalization. So let's look, if each one's a snowflake, let's look at this situation. Let's try to continue to get smarter and more confident about the investment input output situation. When you're in the very early stages, you have extreme uncertainty, and you're going on this path to try to gain more and more certainty as you go. And so just throwing a bunch of money into a startup and saying, we hope they figure it out, tends to not be a great recipe for success, because in those early stages, you don't have much certainty. And in some cases, too much capital too soon can make you sloppy, make bad decisions, and definitely get the cap table into a bad place. So we like to work with founders who have a little bit more discipline in those early stages about learning quickly and learning about all those things that I described earlier, because the earlier you can figure out that you have something that somebody's willing to pay for, the more certainty you can start to develop about how could I potentially start to scale this? How could I build a business that might actually be able to be profitable around this? All of those things that give you a higher probability of sustainability, that you can continue to persist. And that, I think, has stuck with me through all these up and down cycles, that at the end of the day, if you can build a profitable business, you can then control your own destiny. You're not at the whims of the market, where at times the market's very freely putting capital into startups at a highly speculative rate. And at times that completely shuts, and companies are then stuck or they die because they run out of money. And so the more that we can help people manage through that path to at least getting to a break even or profitable business, now you're at a place where you move from, as I say, needing to raise capital to just survive, to maybe wanting to raise capital because you have a lot clearer picture of, if I invest $1 into this business, I have a high likelihood and understanding of what's going to come out of it.
So from a viewer or outside looking in perspective, right? When you talk about VCs or you hear the stories, everyone talks about, okay, I'm going to invest, I have a fund, I want to invest in these companies. My goal is exit, right? Because obviously it's going to sell for high that I invested it for, I'll make money. You said you're not the typical VC in that regard. What are your thoughts on that?
Well, if you think about, the VC industry definitely subscribes to this power law dynamic, which is, if I'm going to make, let's say 20, 25 investments out of a fund, I'm going to probably get the vast majority, if not all of my return, from maybe one or two of those companies that are going to be these outliers. And the other ones probably are going to go to zero. And as long as I hit a couple of those huge grand slams, I don't care, because I am driving purely to a financial return. And those entrepreneurs in all of those losers, unfortunately, they're going to lose as well. And I, as the fund manager, I have this diversified portfolio. I'm okay. That is hard for us for a variety of reasons, and particularly in BankTech Ventures, that is a very hard model for us to sign up for. And I'll explain for a couple of reasons. Number one is we are in service to banks and to an industry of community banks. And the banks are not just the investors in this fund, they are the likely customers, partners, beneficiaries of the companies and their capability that we're investing in. And knowing banks like you do, they tend to be fairly conservative in the kinds of companies they want to do business with. And they want to know with a much higher confidence that business is going to do what they say they're going to do, that they're going to be a good vendor or partner to us, and that we can show our regulators that they're a good vendor, that we're properly managing the risk. And ultimately, they want to know that this is going to be a durable company, that it's going to continue to exist as a business. And that's much more important to them from what I would call a business continuity standpoint. If they're going to hire this company to do something in their infrastructure, they want to know that's going to continue to be there until it's time for us to replace them with somebody else, and that it's not going to go away because it goes out of business. And so we are very keen to put those kind of plans in place and work with founders who are on a path to building a durable, sustainable business that's going to be a good partner to community banks. And that in doing that, we're going to hopefully get more banks to work with those companies. And ultimately, we believe that will drive a higher value in those companies. And we're seeing that a few years into this. But my view is, if we're going to have a portfolio of 20, 25 companies, we want to get as many of those to a durable, profitable state. And that as long as we can get a fair return from that, we'll be fine. And our banks will be happy, because they're looking at this as a dual value. By investing in our fund, they're looking for a curated list and group of the best of breed companies for the future of community banking. And if they can get that, they're going to get a ton of business value from those companies. And then if they also get a positive financial return from the ownership that they have through the fund, that's a nice to have, cherry on top, secondary value. And so we really look at it in a strategic lens and say, we're striving for dual value, but we know that first and foremost, it's about creating the market intelligence and curated group of companies that are going to be high impact to the bank's underlying businesses.
And what you described is a completely different model than the typical VC that you talked about earlier, because it's almost like, not almost, it's from a community banking perspective, we're investing in the fund and partnered with the fund so we can have early access to new technology that we can leverage to add value to our customers and to our banking procedures and different things of that nature. That's like the biggest advantage.
That's
almost. You don't have to be the last to know when something's new out, because we were at the early stages of it, and now we can leverage it for our internal practices.
That's right. Yeah, most of our banks would say we are part of this ecosystem of BankTech Ventures to have a seat at that table, to get access. And really, as we talk a lot with them about market intelligence, they want to be smarter. And we share all of the things that we're learning with them. And we will do that on a broad basis. We do it on an individual bank basis. We're there as a resource to them, and they get to share it. Most of them don't have the wherewithal to do this themselves. And so they look at us as somewhere between their outsourced R&D team and, for the larger banks, a supplement to the work that they're doing, to be just another set of eyes and ears out there looking for things to help them strategically improve their place or differentiate for their customers.
Like off topic, right? But along the same lines, there's a role, like a futurist, right? That the government uses, they're employed, and their goal is to kind of look to see where certain technologies are going. What's the future of this? How's it going to impact different industries? How we're going to leverage it? What's the 10-year outlook, 20-year outlook? Like, what does that picture look like? And they're literally called futurists, and this is what their job is. And I'm drawing an analogy of what you're doing at BankTech Ventures, especially for if I'm working at a community bank or I'm running it, right? Mike, I'm focused on banking business. I don't have that internal resource maybe dedicated to saying, with their fingers on the pulse of what's the latest and greatest, who has different ideas, Or is there somebody we can potentially invest in that we can leverage? And that seems to be, from what you're describing, the role of BankTech Ventures.
Yes, that's a big part. I wouldn't say we're out. We say to our banks all the time, we're not out there really chasing shiny objects. So I think we look at ourselves as, and probably again that pragmatism that I have, that I think is broadly in community bankers. We're looking for shovel-ready solutions to real problems that bankers have. So we want to be able to come in and give them something that they can see the value from very, very quickly today, but that's built on a future-proofed foundation and oriented toward where banking and the world is going. And so most of the companies we work with are relatively young, and they are on modern technology and thinking about, for example, how do we layer AI into this to make banks smarter and more personalized and more predictive in how they engage with their business or their customers. So they're future oriented, but they know that they need to bring in value today to have any chance to work with tens or hundreds of community banks.
I want to ask a question. I have some, obviously some research, some experience in this thing, and I'm going to throw it out there, and I want to know if you agree, and then also if you dive into it. I would say maybe the biggest challenges community banks face, right? Their core banking system, regulatory compliance, digital transformation, cybersecurity. What are your thoughts?
I think you've nailed the majority of them. The other one I would say is just, and this is a reality for a lot of existing businesses, is just culture change.
Really?
How do you manage change?
Huh.
And you have interesting dynamics, for example, where maybe you have an aging workforce within the bank, and I think as people get further into their careers, they tend to be resistant to change. I've been doing it this way for so long. Why do I want to change now? So I think that as how do you manage that change? And then I think in some cases, community banks have aging customer bases as well, particularly on the retail side. And so you have habit-formed customers who are used to coming to the branch, and they're continuing to do so, but yet new, younger potential customers aren't ever going to want to come to a branch. And so I've talked to banks who feel like they have to build almost two different banks, one for today and one for the future. And how do you manage both of those at the same time in that transition from one to the other? And so I think that culture and strategy change is definitely part of the challenge that we see at times.
That's interesting. I want to ask you about that. Like with the other ones that I mentioned, how should I say this? They're not easy problems per se, but they're clear problems to solve from a perspective. It's clear, right? You want to deal with core banking systems. Let's get a new one. Let's figure that out. You want to deal with regulatory compliance. There's a lot of fintechs out there right now that are in that space. Same with cybersecurity and so forth. Have you seen solutions to manage that cultural change?
Not from a technology standpoint per se. I think it's part of the just acknowledging that if we are going to put new technology, new capabilities in place in the bank to help us run operations better, to engage with our customers more effectively, that we need to build a change management plan into that as well, to really remind ourselves that the humans need to also be cared for as they change, because you have as I mentioned, aging workforce. We talk a lot to our banks about how do you make banking a really attractive place for the next generation of talent to want to come and be a part of, and that you need to explain that high tech plus high touch opportunity. That I think a lot of people really like that idea of, I can still interact with customers and build relationships, which most of us like to do that, but I also get to work in modern and interesting systems to support me so that I can do that even better. And that will attract those folks. but most people don't want to come into work today and work on a 25-year-old system, that they're going to feel like they're, going back in time, that they're irrelevant to where the world is going, and that you need to think about those things from a culture in how you think about even supporting your own employees.
Hiring that next generation of workforce with the community banks?
Are we seeing them do it?
You see that as a challenge?
Oh, it's absolutely a challenge. Yeah, and I think we're trying to encourage them to have, again, A, the recognition this is a real challenge, and then B, you can start thinking through what are potential solutions to help us. Do we need to rebrand? Do we need to be more proactive in explaining why this is a great place to start a career to people that maybe don't have banking on their radar at all as a place to consider starting their career over the next few years?
Right? Managing, like in your role and having over 100 LPs, community bankers, how is it managing that process, especially when potential new startups come aboard and so forth? What are some of your challenges that you face? Because overall, it's a huge amount of LPs to manage. How does that process work?
Sure. I mean, I feel very blessed that we have so many banks that have entrusted us with some capital and the desire to work with us and learn from all the work and experiences that we're bringing to them. We really look at each one of them as a customer. And so we do customer management, account management type of activities with them to make sure we understand what are they trying to accomplish in their bank this year, over the next few years. We try to get visibility to their priorities and their strategic plans, and then we can create custom recommendations to them. And so I look at it as we're building a business at BankTech Ventures to serve two different groups. And if we do that well, everyone benefits. So on one hand, we're like a traditional private investment fund that's investing in startups. And so we have a team that does that. And they do that from sourcing and building relationships with those founders to onboarding them to BankTech Ventures and supporting them on an ongoing basis. And then we have a team that is also working with our banks and getting to know them and trying to support them in any and all ways that we can. And we try to bring those together when it makes sense. So when we're talking to one of our founders, we'll say, here are the next 5 banks that we think you should probably meet. And here's why, because we understand where you fit in their prioritization and their roadmap. And that makes good use of everybody's time when we're doing that in a really bespoke and personalized way. And so I think we built a different organization because of who's involved in our ecosystem.
That's interesting. The customer service aspect, I like that. Like what you just mentioned in terms of the interaction with even though you have over 100 LPs, you have customer relationship management aspect. Mm-hmm. So you're interacting with them individually and providing customized solutions for them with the portfolio startups that you have, the companies you have in your portfolio. So that's a different way. Because I was looking at it when I asked the question, I was looking at it different, but how you explain it, that makes a lot of sense. How you do that. So that's the value add, I would say, from a community bank perspective.
Yeah, I think both sides. We work really hard. We show up every day and we work really hard trying and thinking about, we have 2 sets of customers that we have to serve effectively. And the better we do that, we believe it brings more of them together to solve real problems and make everybody better.
Where do you see the future of community banks going?
I think I generally agree with most of the prognostications, which is that we are going to continue to see merger activity and consolidation occurring in community banking. That has been a trend for the last several decades, and I think it will continue. And you have two types. You have buyers and you have sellers, and we can work with both. And the ones that want to digitally transform and build a better business so that they are a more attractive candidate to sell to someone else is somebody that we are happy to work with. There are ones that see the opportunity over the next decade or two and say, we want to build a really efficient and customer focused bank that is the best of both high tech and high touch. And we want to use that to go really expand our capability, and we'll bring others into that fold that haven't done that work. And so we can equip a aggressive, ambitious buyer of other banks to go do that better. And so I do see that activity. There's been not much M&A activity in banking for the last few years. So there's a lot of pent up demand on both sides that we're starting to see this year starting to play out. And I think over the next few years, we're going to see a lot more of that as well. And so that's just going to be the reality of this industry. And, if you look 10 years out, right now there's about 4,000 banks in the US. Maybe we're at 1,000 in 10 years. And that's still many more than exist in any other country in the world, but they're going to have new definitions of communities that they serve. They're going to have new niches that they particularly exist in. And hopefully we continue to have enough that we can get capital to the edges of our economy, which I see as one of the really distinctive aspects of why community banking has been such a key part of the US economy and financial system, is that ability to be distributed and be in those individual communities with custom solutions to help them move forward. And I would be really saddened if that couldn't continue because of the consolidation.
We have to take a brief message from our sponsor, and then I want to follow up with one last question.
Okay.
Are you an emerging fintech with a limited budget seeking more sales and partners? Introducing Strategic Generation, your partner in leveraging cybersecurity for sales and partner enablement. Fintechs often lose opportunities due to unsophisticated cybersecurity programs. That's where we come in. Strategic Generation assists with due diligence, security posture visibility, penetration testing, and on-demand virtual CISO services. We connect your systems to our partnered platform, and voila! Instant access to real-time diagnostics and compliance frameworks such as SOC 2 and PCI DSS. Gain the confidence of prospects and partners. Strengthen your cybersecurity program and drive success. Stop losing deals due to cybersecurity. Visit strategicgeneration.com and click on On-Demand CISO to connect with an expert.
Now, last question I have for you, because I'm really interested in this. You great career, right? You went into the entrepreneurial side. Obviously, you have roots in that from your family business and so forth. You went in, sold, helped build up companies, amazing exits. You have a lot going on. What still drives you at this stage to show up? Like, you could easily, I don't want to, not looking at your pockets, but you can easily probably sit back and say, I had a good run at it. What's that driving force right now? Why are you still showing up?
Yeah, I still have a ton of energy, and I am wildly curious. And that's been part of my DNA since I was very, very young. And my view is I'm going to continue. I view myself as that quintessential lifelong learner who probably will continue to do this as long as people consider me relevant and capable in any way to add value to them. So whether I do it in this form or I do it in some other form, I'm not sure. But as long as my curiosity is still there and I'm comfortable with uncertainty and change, and I just see this continued dynamicism and change in the world, and I want to be part of it. And as long as I still have that energy and enthusiasm to do it, I'm going to try to continue to do it.
We love it. Listen, one of our traditions, at this juncture of the show, I get off the stage and our guests can talk about whatever they want in terms of where they want to be found, what things they have going on to promote. So I'm going to give you that courtesy right now.
Well, thanks, Nandi. I mean, as probably like many, I'm very easy to find. As you said, with my name, it's a fairly unique name, so I'm usually easy to track down. The main things I have going right now: BankTech Ventures, which we talked a fair bit about. Also have a venture studio called Operate. We get involved in really early stage ventures, usually at the intersection of software and data. And then I also am co-founder of my 9th startup. It's called Bonus Homes, bonushomes.com, which I helped co-found a couple years ago, and I'm chairman of. And it's doing some really interesting things for homeowners who want to hold on to their current home and yet still have an opportunity to go buy their next home and maybe move to somewhere. So those are really the main things I have going on. Always happy to meet entrepreneurs, other investors, people who have shared interest and want to compare notes on things. So thanks for having me today, and excited to engage with anyone that enjoyed the conversation.
Thank you very much. I thoroughly enjoyed this conversation. Like I always tell my audience, I started this show kind of selfishly because I wanted to talk to people like you and just learn more. And I'd rather talk to people sometimes than reading random things in theory. So thank you for being a guest on the show. I consider you a friend of the show. Definitely invite you back. We have topics that pertain to your expertise and so forth. To the audience, thank you very much for viewing the show. Thank you for the messages. Thank you for the DMs. We really appreciate you. Tech Behind FinTech's live every Friday, 12 p.m. EST. And on that note, I bid everyone a good weekend. Carey, offline, I'll be in touch with you from time to time. And that's really it. That's our show today, guys. Have a great holiday weekend.
You too.
Cheers.
Understanding the technology that powers the money is essential. Knowing the business drivers that inspire how the money is made is crucial. Bridging the gap between the mind of the technologist and the mind of the business is monumental. That is what TBF is all about. Let's start this never-ending conversation. It's time.